It's Wednesday and Fed Day. We're seeing the major U.S. stock averages fast approach that flat line. Joining me this afternoon is Jonathan Corpina of Meridian Equity Partners. John, great to have you on the show.
Thank you for having me.
Well, first and foremost, we've had quite a week. We started out with a lot of turmoil in terms of politics, and now here we are on Fed Day. The major stock averages started out strong, but we're seeing flatlining for the averages. So where do we go from here?
Right. So, I mean, we've had many different factors have really affected this market this week. I think the top one has been politics. Some of the headlines that came out over the weekend and some of the headlines in the beginning of this week are really adding to the momentum in both ways in this market. I think some of the president's executive orders have caused some uncertainty as to what things are going to look like both within the United States and globally. And I think with this market run-up that we've seen over the last few months, these types of headlines give investors a reason to take some profits off the table. Into this week, we continue into earnings season. We've got a really large plate of economic data, and we are going to hear from the Fed today. So I think that just put all that together, I think investors feel a little bit uncertain as to where this market is, and that's why we've continued to see this downturn. It's not fear, it's not panic, it's just more opportunistic. Take some of the short-term profits off the table, and let's see how things pan out for the next few weeks.
And John, as you mentioned, today is Fed Day. We'll be getting a statement, but no press conference out from Janet Yellen. So in terms of the actual language, what will you be watching for?
I think we're going to see the same blueprint that we've seen before in the past. That would be somewhat smart of them to make sure they don't rattle anything at this point right now. They were very clear, a little bit more transparent in the statement that we had in December. And I don't think the Fed really needs to make any big splash right now. So what are we looking for? We're looking for something that we haven't heard already, which I don't think we're going to get. Also looking for if they're willing to give us a timeline as to when they might look to raise interest rates again. We're very clear that there is going to be a pattern of interest rate hikes in 2017. We know they're going to be data dependent, and that data, we can debate whether that supports a rise or not. But I think at this point, the primary thing is going to be looking for, is there a timeline that they're going to tip their hand to?
And speaking of economic data, we got ADP this morning, and we saw stronger than expected figures for the private sector. So how important will Friday's numbers be?
I think they will be. Look, those numbers are always important, and like I said, the Fed always says that they are data dependent, and they're going to use that main number as the number that they're going to hang their hat on. So I think overall these numbers are very important. It's going to be interesting to see how President Trump takes these numbers and maybe tries to take some ownership for them, or if these are numbers that are left over from the prior administration. But I think overall, when you take a step back, our economy has gotten better. Our job numbers have gotten better. I think people feel much more acceptable of investing in the market, much more acceptable of taking out a loan to buy a home. And I think that's an overall good mentality that we've seen. We just need to keep that momentum moving forward.
And Jonathan, last but not least, before I let you go, we've been seeing plenty of action in the FX markets as well as commodities. And that all has to do with what we're seeing in terms of comments coming out from the White House. But for the equity markets, bond markets, and other financial instruments, are there any technical levels you're watching right now?
I think when you look at the S&P, when I was coming in this morning, 2262 was a low that we've seen most recently. The futures this morning were trading much higher, and it seemed like the market had a trend to move higher. But I think on the downside, on a short-term level, that's the level that we're looking at now. Clearly on the Dow, we've talked about this psychological level of 20,000. We finally broke above it, came back down now. So I think investors might be using that again as a resistance level that we might want to get this market through again.
Well, we'll certainly keep an eye on those levels. And as always, thank you for joining me, and thanks for all your insight.
Thank you.